Here is the uncomfortable truth. Paid search is not always performance marketing. Sometimes it is a tax on demand your company already created, a tax on brand awareness your team already built, a tax on buyers who were already looking for you. And in the era of artificial intelligence, that tax may get more dangerous because search is changing. Clicks are changing. Artificial intelligence answers are changing the buyer journey. But the platforms still know how to monetize attention. So the boardroom question is blunt. Is your enterprise buying incremental growth or renting back demand it should already own? Paid search often gets credit because it sits at the end of the journey. The buyer watches a video, reads a report, hears a podcast, attends a webinar, gets an email, talks to a peer, sees a social post, then searches the company name. And what happens? Paid search claims the conversion. That is convenient. That is also dangerous, because last-click attribution can make rented demand look like growth. The platform says, we drove the sale. But the harder question is, would the customer have converted anyway? If yes, your company did not buy performance. It bought attribution theater. Artificial intelligence changes the search game. The old world was simple. Rank high, buy keywords, capture clicks, measure conversions. But artificial intelligence search changes the flow. Users may get answers before clicking. Research questions may be satisfied directly. Source visibility may shift. Organic traffic may become less predictable, and paid clicks may become more expensive. That means enterprises cannot just depend on search engine optimization and paid keywords the old way. They need answer authority. They need original research. They need decision assets. They need trusted content that artificial intelligence systems can recognize. The new battle is not just ranking. The new battle is being trusted before the buyer clicks. The goal is not to eliminate paid search. That is too simplistic. The goal is to stop being held hostage by it. Paid search should be a precision instrument. Keep paid search where it is truly incremental, high-intent, non-brand terms. But stop wasting money on broad, vague, research stage keywords and branded clicks that would have converted anyway. Paid search should capture demand. Owned authority should create it. That is the shift. In the AIPOC.AI red zone, expose the waste. Separate the spend. Brand terms, non-brand terms, competitor terms. Do not let them hide inside one blended dashboard. That is where waste survives. Ask the hard questions. If paid search does not create incremental revenue, it is not performance marketing. It is a toll. In the yellow zone, prove before you cut. Do not blindly shut off paid search. That is reckless. Test it. Run incrementality tests. Use holdout markets. Pause selected branded terms. Compare paid and organic substitution. Track margin. Track payback. Track qualified opportunity quality. No incrementality, no confidence. No confidence, no budget protection. Now build the replacement engine. Start with answer authority. Generic content is dying. Build decision assets. Original research, benchmark reports, return on investment calculators, buyer checklists, vendor comparison frameworks, board briefing documents, interactive assessments, executive guides. The buyer should rely on your company to think. Next, build owned demand. Build direct audience channels, YouTube, LinkedIn, executive newsletters, webinars, community. First-party data means information your company collects directly. That is enterprise equity. Rebuying buyers through auctions must end. The platform wants you dependent. The enterprise must become unavoidable. Use artificial intelligence to get sharper, not louder. Use artificial intelligence to mine buyer questions, analyze sales call objections, cluster search intent, find content gaps. Identify underperforming paid terms. Detect wasted spend. Artificial intelligence should help marketing understand the buyer better, not manufacture more junk. In the AIPOC.AI green zone, paid search becomes governed spend. Keep only what is incremental and profitable. Reinvest into durable assets. The goal is not just lower media spend. The goal is lower dependency. That is the board-level metric. Procurement should be surgical with paid media agencies. Demand incrementality testing and search term transparency. Demand data ownership. Agency compensation should not be blindly tied to media spend. If the agency profits from higher spend, it may not be motivated to reduce dependency. Boards should stop accepting vanity metrics. The board needs dependency metrics, paid search dependency ratio, organic authority growth, marketing sourced margin, search spend avoided. That changes the conversation to reducing dependency. That is executive marketing discipline. Here is the hard warning. The companies that win will be the ones buyers trust before the search, the ones artificial intelligence systems cite. Permanent paid search dependency is strategic weakness. If you pay a toll every time a buyer raises their hand, you do not own demand. You rent it, and the rent can go up whenever the platform decides. That is not control. That is dependency with a dashboard. For more hard-hitting executive briefings on artificial intelligence governance and 2030 readiness, visit AIPOC Powered on YouTube and go to www.aipoc.ai.